All right, cool. So we can maybe just get started with some little like basic intros, and then we'll dive into the protocol itself. Maybe we can start with you, Publius, if you're going to do most of the talking, but maybe just a little bit of background on yourself as far as it pertains to crypto and where you fit in the Bean team, like what your role is, what you tackle. Yeah, take it away.
Sure. Thank you very much for having us.
Oh,
Yeah,
and
go ahead.
apologies. Usually, I have people on here who. Well, actually, I think you guys would know this, but this is Timmy, Tenderman Timmy on the account talking. Didn't fail to introduce myself because usually people know, but apologies. Take it away.
No worries, brother, and thanks again for having us. So, uh, me personally, I'm one third of Publius. We Publius are collectively the pseudonymous founders of Beanstalk. Beanstalk was originally founded entirely anonymously, meaning we didn't tell anyone who we were, and we can get into why we did that and why we thought being anonymous was better for the long term success of Beanstalk. Uh, at this point, we're doxxed. The dox was one of the results of the April Beanstalk exploit. Because of our anonymity, a lot of people thought that we were somehow involved in the hack, and so we came clean and basically said this is who we are, and we didn't have anything to do with it, and maybe a little more positive spin on our relationship to crypto is that the three of us have been involved in crypto in various capacities for the past 5 years ish, maybe even 6 years now, and have skill sets ranging from economics to computer science between the three of us, and we're all like 25 ish.
Cool. And is Guy one of the three you're talking about, or is Guy? Have you come in after the fact?
Yeah, so at this point, there's a huge set of contributors, like in the dozens across a variety of different organizations contributing to Beanstalk. And Guy is one of the contributors to Beanstalk Farms, which is an open development organization funded by the DAO to work on Beanstalk, but is not. Guy is a separate entity from Publius.
Gotcha. Okay, cool. Sweet. So yeah, let's maybe jump into Beanstalk officially. Guy, if you want to give a little intro, feel free. I'm not sure how much of the talking you want to do tonight. I know you indicated it'll mainly be Publius, but if you'd like, feel free. Actually,
I'll
yeah,
hold
it
off
might.
and let Publius do the talking.
Okay, cool. It might be good real quick to just shout out how Beanstalk Farms fits into it, and you can chill your stuff for a minute. I think you guys also do like spaces. Is that correct? Or
Well, I guess
podcast?
the quick TLDR on what Beanstalk Farms is just, as Publius mentioned, a set of contributors that, on a recurring basis, propose budgets to the DAO to mint beans to fund development. Publius does not work as part of Beanstalk Farms per se. All the folks who have found Beanstalk and contribute to Beanstalk through Beanstalk Farms, just found Beanstalk organically and didn't found it per se.
Cool. Sounds good. All right. So yeah, let's dive in. So maybe a little basic overview of like being just at face value. If you were given someone the couple sentence summary, and then maybe we can get into a little bit of the history, because from what little I've sort of learned and seen, it looks like currently minting is turned off. You guys went through a hack at some point. I know that just like I think there's a lot of stuff to dig through, but let's start at the highest level, sort of face value for people who aren't sure what Bean is. How would you pitch it or describe it?
Okay, so we'll do our best to try to describe Beanstalk in a simple and intelligible fashion. If we lose you anywhere, Timmy, let us know. So
Yeah, we'll get through all the details with questions. No worries. I'll let you get through.
beautiful. So Beanstalk is an open source protocol that is deployed on the Ethereum network that is designed to issue a low volatility money. Now, cryptocurrency and the general design space for cryptocurrencies has generally moved pretty unanimously in the direction of hard money or store of value optimizations, and Bitcoin and Ether, which are by a pretty wide margin the largest cryptocurrencies, at this point both have monetary policies that significantly optimize for store of value or number go up dynamics, which is valuable, clearly. But when it comes to facilitating economic activity on chain, number go up currencies are not very useful for businesses that need access to loans. And the reason for that is if you're a business, you don't want to denominate your liabilities or your loans in something that may 10x in value over the course of the loan. And so given the amount of economic activity today in today's economy that is a function of credit or loans, there is a need to have the ability to borrow money on chain in a competitive fashion to borrowing money off chain. And when we talk about borrowing money, there's the money itself, and then there's the interest rates on the money. And what Beanstalk is an attempt at fundamentally is creating a low volatility money with competitive interest rates compared to other currencies. So whereas most cryptocurrencies are currently designed for number go up, Beanstalk is designed for number stay about the same. And the concept of a stable coin is in and of itself pretty well understood, but other stablecoin designs, or at least other stablecoin designs that have been implemented to date, each have a variety of issues with them. Of the successful attempts at stablecoins, the largest ones have both a centralization and censorship issue, but more than that, they have a fundamental economics issue around collateral, where if you have a stablecoin that is based on collateral, there is some opportunity cost associated with that collateral for locking it up to mint the stablecoin. And the punchline is that opportunity cost, if you have a collateralized stablecoin versus an uncollateralized stablecoin, makes the interest rates on collateralized money simply non-competitive with interest rates on uncollateralized money. And when you consider that today, the majority of economic activity is happening in an uncollateralized money, US dollars, it seems almost impossible to believe that an on-chain collateralized money would be able to compete with off-chain non-collateralized money. And so Beanstalk, again, just I know this has been a little bit of a longer answer than perhaps originally intended, or you had asked about. But the idea is Beanstalk is designed to create low volatility money with competitive carrying costs to current fiat currencies and any other currency that could exist.
Okay, awesome. Good summary there. So I guess one of the first things I want to ask to kind of help give me some maybe context or sort of frame going into this discussion. One of the reasons when I saw you guys, I reached out and wanted to do a Spaces is because I've always been pretty skeptical of like collateral backed stable coins. Like I wouldn't call myself an economist or even like a mathematician, but something has just never sat right about that model with me as far as it just seeming capital inefficient. Like you're using money to create money in a way. It hasn't ever added up. I just can't totally put my finger on it. So I've always been really fascinated by alternatives like Luna and UST at the time. And then for the longest time still to now, like Ampleforth is one I keep my eye on, and their new like spot token. Very kind of open-ended question, but like what are your thoughts on Ampleforth, or how does something like they're taking a totally different approach to collateral backed, but just some of what you were saying there in that description made me think like, oh, this is the language Ampleforth people use. Like it's not necessarily a stable coin, it's low volatility money, or Yeah. Have you guys like looked into them at all or been inspired or taken anything, or is it really just too fundamentally different to even kind of compare?
Well, you can always compare, and
Yeah.
the algo stablecoin space is particularly the design space to date has been pretty limited.
Hmm.
So, there's definitely a lot to be said about comparing the Beanstalk and Ampleforth models, and Ampleforth has very much been a trailblazer in many regards. And we actually had the great pleasure of meeting Brandon from Ampleforth recently, and he was a wonderful person.
Oh,
And
cool.
we got a chance to hear about what they've been up to and how they're thinking about things with Spot, which we had not totally been up to speed on.
Hmm.
And think Spot is a really compelling idea that uh, you have the ability to effectively tranche risk to create lower volatility tranches. And that as a concept makes a lot of sense. And one could imagine that like buttonwood tranching model as it's applied to creating low volatility assets in general could definitely be used in DeFi in a lot of ways. This is a very compelling idea. But to get to the thing you were mentioning before around the inefficiency of collateral, the
Yeah.
spot design presents a very open question of which like one of the cool things about being in this space is the market will ultimately decide as to whether having a wrapper around an uncollateralized money such that it creates a lower volatility tranche of that uncollateralized money, whether that is a better base version of a stable
Yeah.
coin than something that is meant to just be lower like bean volatility versus Ampleforth volatility will be like bean volatility should be lower based on how the
Yeah.
models work, but it's like, well, spot volatility may be lower than bean volatility, but then
But are the trade-offs worth it?
you could take the spot tranching model and roll that out on top of Beanstalk as well. And then it's like,
Oh,
well,
interesting.
how would the spot tranche Beanstalk work compared to the spot tranche Ampleforth, let's call it?
Yeah.
And so this is like, as people get more jazzed about stable coins as sort of a valid intellectual pursuit and experiment, which post the Terra collapse has been a harder conversation for people to engage in genuinely, it seems. But it's like as more people try to start participating in a lot of these experiments, yeah, those are the types of things that people will build these cool ideas and then the market will decide which has the most utility, if that makes sense.
Yeah. No, that totally makes sense. I agree. Okay, cool. Let's definitely like circle back to some of this actually, like particularly taking the spot model and applying it to Bean. But I think first I need a better understanding of Beanstalk itself. So coming back to the matter at hand, um, let's maybe just start with kind of like a history because I'm kind of curious, like some of the stuff I mentioned earlier. So like I know there was an exploit at one point. Um, then someone mentioned recently that minting is currently turned off. I noticed you're very off peg right now. So maybe just kind of a quick run up for whatever you think's a major invented event and like important enough to touch on. But how have we gotten to where we are right now in the Beanstalk life cycle?
All right, so we'll try to give a quick summary of the roller coaster that has been the past couple of years. But maybe just to quickly wrap up the conversation about the collateralized wrapper around an uncollateralized money, feel like that's sort of like LUSD on Ether, and you don't really get around the capital inefficiency associated with a lockup. So it's unclear if the spot model will actually like solve the capital
I'm
inefficiency
actually
problem. Go
I'm
ahead.
actually not super from what the I'm not familiar with the LUSD model. Is it
LU,
possible to give like a one
LUSD
or
is like
two
a
sentence?
LUSD is a MakerDAO fork that just uses Ether. So Ether is
Oh, I have heard of that. Okay.
It's liquidity protocol. So there's
Yeah.
it's a non-collateralized base money, which is Ether, that is then being wrapped permissionlessly to create, a lower volatility tranche, let's call it. And it's like the spot model probably works better on Ether than the LUSD model does, or maybe it does. But I think we're sort of comparing apples and oranges when it comes to collateralized wrappers versus the uncollateralized base money. So anyways, let's push that aside as you suggested, but just wanted to tie a bow on that for completion
Yeah,
and
that was a good wrapper.
talk about the history. So we mentioned it briefly before, but we'll add some more hopefully helpful color here. So Publius worked on Beanstalk for about 9 months in secret, effectively, from November of 2020 to August of 2021, when we deployed Beanstalk on ETH mainnet. And over the next couple of weeks, we basically tried to anonymously, without a network, get anyone on the internet who we could to look at the project. And it took a couple weeks, but in September, so it's like 5 or 6 weeks after being deployed, the protocol went viral on crypto Twitter. And we still don't know exactly how that happened. It might have been like a tweet from Sisyphus or something. But the point is that the Bean price went up to $4, and the market cap grew from a couple million up to like 40 million.
And so let me jump in here. Apologies. So is Bean the actual stable token, or is that
Correct.
something like a governance token? Okay, interesting.
Bean is the stable coin.
And that so went to $4.
Correct. So there was so much demand, and the supply was so small at the time, because the Bean supply was only 100 when it was originally deployed, and all Bean growth since then has been according to the algorithm. So it's like it starts at basically zero and it's growing, and as it's growing very slowly from zero, it suddenly goes viral on crypto Twitter and explodes. And price goes up to $4, and then ensuingly crashes to 24 cents. And this was 5-6 weeks after the initial deployment, and was the initial test, if you will, for the Beanstalk model. And we haven't really talked about the model and how it is different than like other attempts at algo stables, which maybe we'll get to. But the point is, this was the first big test for the model. And it took over a month, but the protocol was able to, over time, return the Bean price from 24 cents to $1. And we can get into how all that works at some point, but we're just telling the history. That was really like a 0 to 1 moment for Beanstalk in many ways, because now there was a community that had participated in this crazy pump and dump. Those that remained had seen the thing go up and go down, and there was some community with faith in the model at that point. And
so, wait, and when was that?
Yeah.
Like relative to now? Is that about?
That was September and October of 2021.
Okay.
So about 18 months ago.
Yep.
And basically that was the starting point of a wild 8 months where Beanstalk had a number of other cycles, each less volatile than the last in the grand scheme of things, where around Thanksgiving the price went up again, like above $1.50, I believe, and then back down to 80 cents. There have been a couple oscillations since then over months-long periods of time, one of which, as you commented about, the system is currently in at the moment, is a period of downside volatility. But the point is that at a high level, this is not like the volatility itself is not the indication of a problem. It's the problem that has always been there that the system has to be able to solve, if that makes sense. So it's like each of these depegs, whether it's up or down, it's an open question as to how can the system respond. And so the first 9 months history of Beanstalk from deployment until the exploit in April of 22 was a series of growth cycles and debt cycles, each of which lasted a couple months. And over those couple months, the system grew from a supply of 100 beans to a little over 100 million beans at the time of the exploit. And so and it is worth saying, like, from the time until the model was deployed until the exploit, there were a large variety of improvements to the protocol that were implemented by the DAO. So part of the roller coaster of those 9 months was that there would be an inefficiency discovered in the model and practice, and then there would be a plan to fix the inefficiency that would then get implemented and then voted on by the DAO, and then most of the time implemented. And so it was like a very radically quick-paced period of experimentation, which culminated in getting to a point where the model was really, firing on all cylinders, if you will. And the health of the system at the moment, the block before the exploit, was by far the best state of the system up until that point. And then the
protocol
go ahead.
So let's take a pause before we get to the exploit. I think about now, I think we should actually dive into the actual system, and then we can kind of keep going, and I'll probably understand the exploit better then. So what might be the normal first question on another like podcast or interview, let's just talk about like how Bean actually works, like how this system you keep referring to, the algorithm, etc. How it all functions.
All right, so it'll be hard to cover all of it because it's not the simplest thing in the world, but we're happy to go as deep as you want, but we'll keep it high level to start.
Cool.
So beans are credit-based money. Fundamentally, if you are using beans or holding beans, the assumption that you are making is that Beanstalk, as an issuer of the money, will remain credit-worthy. What that means is that Beanstalk will be able to borrow money from the open market in order to reduce the price volatility of beans. So if you think that at some point in the future, Beanstalk will be able to borrow money from the market to return the price to its peg, then you're sort of assuming that Beanstalk is credit worthy, and that credit worthiness is the fundamental thing that gives beans their value. Because when the bean price is too high, it's quite simple. Beanstalk can just mint new beans and then distribute them, as defined by the algorithm, if you will. But then on the other hand, when the price is too low, Beanstalk needs a way to decrease the supply of beans. And so the fundamental, like the core peg maintenance piece of the puzzle is the ability for Beanstalk to borrow beans from the market. So
it's almost similar to Ampleforth in that part of the stabilization comes from not exactly rebasing in the way they do, but like in changing the amount of circulating bean.
Correct. The difference with Ampleforth on the rebasing front is that if you're a user of a bean, you will never have that bean taken
It's not
from
going to
you.
change. Yeah.
But you can voluntarily elect to forfeit your beans by lending them to the system, which will then burn the beans in exchange for debt from Beanstalk. And that debt pays some interest rate or multiple, which we can get into the specifics. But the point is that
my next question was actually going to be, so let's dive into that like lending and borrowing part. So the way you describe Bean is like at some point in the future, the Beanstalk protocol, or you're making the assumption that at some point in the future, the Beanstalk protocol will be able to borrow money from the open market to back those beans or supply them, or I'm not sure exactly. So let's just dive into that part. So like, what do you mean exactly by borrow money from the open? Like, where's that money coming from? What does that mean exactly?
So the simplest way to think about borrowing money is you're selling debt. You're selling an asset. And The question is around the features of that asset and how they make it more or less likely for the market to be willing to buy that asset from you, if that makes sense. So if you want to map Beanstalk to something like Terra, which it does generally map to, the concept is the Luna asset, in the case of that system, was the thing that was being sold in order to provide value to the holders of the stablecoin in some capacity.
Yeah.
And like there's a lot of nuanced differences between Luna and the debt of Beanstalk, but you can think about it fundamentally as the system has to, or maybe not has to. In Beanstalk's case, it actually doesn't have a hard peg promise. So it doesn't have to sell the debt, which is very important. But the point is, in general, the system wants to sell some asset. What is the best price that the system can get for selling that asset? And the interesting thing is that, particularly given the nature of like a bank run or a DPEG, there's some concept of, and you're doing it through a smart contract, the market, if the incentives created by the asset sale are not perfect, the market will eat up the asset, if that makes sense. And so what happened with Terra in practice is that the structure of the sale of the asset that in practice was Luna was such that there was a tragedy of the commons to buy Luna at the moment that the system needed you to buy Luna. So it's like when there's a Terra DPEG, the number one thing that Terra needs is for there to be demand for Luna. Like that's the asset that the system needs to liquidate. The fundamental value proposition is like, or the assumption is there will be demand for Luna, if that makes sense.
Yeah,
so
the whole thing was like, if there are buyers for Luna, UST would hold its peg. That was the sort of...
In the same way, it's like, well, if there's demand to buy Beanstalk debt, then it will stay, there will be the ability to create low volatility. And so it's a really important thing to get into, which is like...
But Beanstalk debt from what? From Bean itself, or are there other assets involved in this system?
Yeah, this is where we're going. So
okay, cool.
This is great. So the fundamental thing to get into is the difference between something like equity and debt. So Luna as a token really mapped to equity. So it's this fungible equity token that is receiving some revenue in a network, sort of like equity in a company. And totally separate from discussions around securities laws. The point is, if Microsoft, which has some of the most consistent revenues as a company, had an outstanding stablecoin balance that was convertible to their equity of $10 trillion, you would still have the same run on the bank that happened with Terra, because the fungible equity token during the bank run, there's no bid for. And that's because of the fungibility. Like at the margin during the bank run, there's like a question: do you participate in the bank run or do you catch the knife? And fungibility basically creates this catching the knife problem where, and there's also the future revenue expectations that make it very hard to price all of this. And so in practice, no one was willing to catch the knife. The fundamental difference between equity and credit is that, unlike equity, which cannot scale to trillions per the Microsoft thing, credit actually scales infinite, because the more credit that Beanstalk pays back, the more credit worthy it becomes. And that is a positive feedback loop where the credit of the system can ultimately grow to trillions of dollars. But when it comes to catching the knife or creating incentives for the debt to catch the knife, there is actually another asset in the system called pods, which is the debt asset of Beanstalk. So mechanically, if you lend beans to Beanstalk, you receive pods. And at some point in the future, those pods then become redeemable for more beans. Now, when it comes to trying to create the incentive.
Wait, can you literally just say that again? Just the relationship, literally repeat that last sentence.
So if you have beans, you can lend the beans to Beanstalk and you receive pods. At some point in the future, each pod will become redeemable for one bean.
Okay.
So
and that's where new beans coming into existence come from?
Well, new beans are minted based on demand for beans. So if the price of beans are too high, only then are beans minted, and then some of those newly minted beans are distributed to paying off debt.
Oh, so when new beans are minted, some are used to like mature those pods into beans, whereas others are used for, or where do they go? Into the protocol itself?
No, this is where there's two halves of the protocol. So we've so far been talking exclusively about the lending and the credit side of the protocol, which is where it gets its like beans get their fundamental value from a theoretical economics perspective, which, to like a new audience, feel like it's important to start from here's where the theoretical value comes from.
Sure.
And do want to just say, we know we haven't really gotten into how the pod structure economically is better than the Terra equity, but we can return to that if you find it valuable. Just want to kind of say that we know we haven't answered that, so it's not to say like we don't have an answer, but happy to take
no worries. Yeah, this is a lot to take in, so happy to just kind of go with it as it comes.
Just from a credibility perspective, just want to caveat, like we're happy to go in the direction of the silo, but just want to say like there's a lot to be said about the economics of pods, which we're happy to do at some point. So anyways, the other half of the system is the silo, which you can sort of think of as the bank of the system, which is the part of the system that goes through bank runs. And so like any stablecoin protocol can have a bank run. The silo, counterintuitively, is like the bank layer that is introduced to create incentives to limit bank runs. So like the system itself has bank runs because it's a non-collateralized money. The silo is the anti-bank run.
What is a bank run in Bean's case? Would that just be people selling Bean?
Correct.
Correct. Okay. Yep.
Like people getting out of the system quick. For whatever reason.
Okay. Cool.
Which has happened many times. It's like the $4 to 24 cents drop was the most extreme, but there have been a number of mini runs.
Okay, I want to let you just keep going, honestly, but just to make sure I'm following you up until this point.
Please.
Like the one sentence, like I'm trying to distill everything down, is beans are almost. Oh, I had it in my head a second ago. It's still all the pieces are still kind of slowly falling together. It's something where if you buy into the system, if you purchase beans, you are incentivized to do so because you get more beans down the road through pod. I'm not necessarily asking a question. I'm kind of thinking out loud here because I'm now starting to really see the similarities to Terra. Different for sure, but I'm seeing the parallel.
Let's say the value proposition is that beans are better money to use than Bitcoin or Ether or any other currency because it has low volatility and competitive carrying costs. At that point, people may want to use the currency because it's a great currency, but to sort of get to 0 to 1 to have the currency, you need the model itself to create endogenous value. So there's definitely some circularity in value to get the system started, where like the system has to be able to contain itself, so that like what that process you were describing of people wanting to buy beans to like have more beans in the future, you can think of that as like the bootstrapping phase, where there's some set of early adopters where before there is real utility in the currency, recognize the potential for utility in the currency and want to, take a chunk of that, future system, let's call it. And that's that's where we're like, that's why someone might want to get involved at this point is, the potential for it. I mean, it's hard to see beans being like super useful today, to be totally frank, just based on the state of DeFi. And so it's like, well, why would someone want to buy debt from the system? Because they see the potential of it in the future. But we still haven't gotten to the silo, which is where like most users would probably interact with Beanstalk. That's the bank.
Okay, cool.
So
yeah, go for it.
Yeah, so the other half of the system, other than the field, the credit facility where the lending happens, is called the silo, which is the bank. And users can deposit whitelisted tokens into the silo, Beans and various LP tokens that Beans trade against, that they receive 2 additional tokens upon deposit into the silo. So if you deposit a bean into the silo, you receive stock and seeds. Stock is the governance token, which entitles you to a vote in the system, and it also entitles you to a share of all future bean mints.
And so I was gonna ask earlier, actually. So are all of the Beanstalk core contracts controlled by a DAO that Stock is a part of, or the governance token for? Is that how it works?
Correct.
Okay.
Which is to circle back on the exploit, that was ultimately how Beanstalk was attacked. Was that there was a 51% attack on Stock?
Oh wow, that's interesting. We've recently had some similar exploits in the Cosmos with DAOs that came through such a simple sort of attack vector. Yeah. Cool. We'll definitely cover the exploit, but feel free to keep going on silos.
So when you deposit, you get stock and seeds. The stock entitles you to a vote on governance and a portion of all future bean mints. So when the beans are minted, some go to paying off debt and some go to paying stockholders. And you can think of depositing in the silo as like a passive risk-free rate of return of the system, where just for holding you're already holding beans, you're already holding the exposure to the system. Just for leaving your assets in the silo, you receive some yield. Now, why does Beanstalk want you to leave your assets in the silo? It's again that the silo allows for the imposition of like anti-bank run incentives on top of this. So where does this come in? This is the seeds. So you receive stock and you receive seeds when you deposit. The seeds yield more stock over time, linearly. And there's a rule that the silo enforces that when you withdraw from the silo, when you withdraw your deposit from the silo, you have to forfeit all of the stock and all of the seeds associated with that deposit. So you only get the stock for as long as you keep the underlying deposit in the system. And the fact that you get more stock over time creates this opportunity cost in the form of the stock that you would have to forfeit for leaving and coming back. So in the moment of a bank run, when you're faced with this fundamental question of there's this risk to the system, do I leave and maybe come back later? Or do I stick it out and wait it out? And what the stock that has grown from the seeds does is create an opportunity cost associated with leaving and coming back that can be like explicitly calculated economically, such that like participating in a bank run or not is something that you can calculate for yourself. And therefore, while it cannot prevent a bank run, it creates a real efficiency around bank runs that it both like exacerbates them to happen quickly and limits the extent of them very much so. And we're happy to get into more of the like reasons how the opportunity cost plays that out. But like this is the fundamental reason why the silo exists, is to create this stickiness in the system when the bank runs, which are inevitable, ultimately happen, that Beanstalk can create some reason not to leave and come back, if that makes sense.
Okay. Okay, yeah. We'll definitely dig into that a little more. Real quick though, so one thing that you kind of lost me with is, are pods different from seeds? If so, I think I missed what seeds are and how they fit in. So there's bean, pod. So bean, which is the stable coin, pods, which are sort of a guarantee of beans in the future.
Yes.
Stock, which is the governance token, and then seeds
yield more stock over time.
Oh, interesting. Is that sort of like most tokens that you stake in just crypto systems give you like more of them over time? Is that sort of your answer to that? Like, since that just being a DAO token doesn't inherently do that, or is there kind of?
So
oh no, I see. I guess I see. It also plays into.
The only reason it exists at all is to create the opportunity cost. Like seeds, you can really think of as an abstraction of like how much stock do you get per season, per hour, for having your assets deposited in the silo. So like seeds are an abstraction that helps you think about like earning stock.
Oh, interesting.
How many seeds do I have? Well, how much stock am I earning? But it's like the seeds themselves are an abstraction for growing stock.
But this might be a dumb question, but what if I like sold my seeds or sent them elsewhere, but then left my other assets in the silo? Yeah.
That's a great question. So currently, because this is technically complex to account for, there has yet to be a liquid seed implementation. So currently all stock and all seeds are linked to your deposit. It's like a deposit.
Sort of soul bound in a way.
Omnibus.
Deposit bound.
Yeah, deposit bound.
Right.
This is one of the major upgrades that's being worked on over the next, couple quarters is going to be stock and seed liquidity. Separating out that deposit into 3 different assets.
Interesting. Okay. To what benefit?
More economic efficiency.
But it feels like stock and seed go absolutely hand in hand. Like it's almost like if
everything goes hand in hand, but what you want is liquidity at every layer of the system. Because the more liquidity you have and the more ability for like independent actors in the system to take specific bets.
If seeds are sort of just a way to an abstraction of like your growth potential from being in the silo.
So are beans, so are pods. Like everything. This is like the cool thing about composable tech. Like whether something is a tradable token or not is sort of like just.
So I guess better question.
Implement the abstraction.
Better question: why separate that functionality? Why have both stock and seeds when you could just make it so that when stock is deposited, you get more of it over time? Like what? I think the reason for that choice might
not just have stock rebase.
What do you mean?
Well, you're saying like if you have stock, you get more stock over time.
Yeah, because that's essentially what seed does.
Great question.
Yeah. So kind of like I'm in the Cosmos mindset, right? So all of our stuff's proof of stake. It's 2 functions combined into 1 token.
I'm with you. So this has to do with creating economics that do not overly they create the opportunity cost we're talking about without making it such that earlier entrances in the system or early entrants in the system have an unfair advantage over later entrants. So the issue is that if you have stock yielding more stock, that effectively becomes exponential growth on your stock. Whereas what we want is linear growth in your stock. And the reason for that is that let's say that you came in a month ago and you've got X grown stocks. You've got some bonus. And now I come in. So you've got X bonus over me. After another month, you will have 2X and I will have 1X bonus.
Yeah.
So you're like the over, and then we'll go to 3X.
Just basic
2X.
Compounding.
Like the relative advantage you have over me for starting earlier trends to 0 over time. But individually, we are all still faced with this opportunity cost.
So, but people still have the opportunity to kind of do that sort of compounding, right? They could take, or in the future, when you add like liquidity pairs and make them liquid, people could take the stock that they get from holding seeds and like sell that to get more seeds, or just deposit
Yep,
in the
or
system
vice
to get
versa.
more.
They can
Yeah, or
prioritize
vice. Yep.
because when you're think about it, it's even more complex. When you hold stock, you get paid more beans, right? When the beans are minted, and when you get
Hmm.
paid beans, those beans come with stock and seed. So there's an open question of like, should you hold stock or should you hold seeds? And the benefit of holding one or the other has to do with, like, from an efficient economics perspective, your estimation of the time over which the beans will be minted. Because if you think that the beans are going to get
Mm.
minted immediately, you want more stock. If you think that the seeds are going to get minted, the beans are going to get minted over time, you want the seeds because then you'll get more stock that will then yield more beans.
Yes. Okay. Okay. Gotcha. And so when my stock is in the silo, is that when I can use it to like vote? Is the silo also a DAO, or is it an either or thing?
The silo is the DAO, and
Okay.
like the stock, particularly since it's not currently liquid, like only exists within the
Oh,
silo as a
true. Right.
concept. But even if it were liquid, like you can do whatever you want. You can go stake your stock somewhere else, but in theory, you would still, at least, one can assume you'd probably still have your governance rights.
Okay. Okay, gotcha. Yeah, so it is a little bit different than DAOs like I might think of them, where you have to, well, of course it is right now because it's just sort of lives wholly within the silo. Okay, cool. I'm more or less with you so far.
So you deposit
Cool.
value in the silo and you get stock and seeds. You get to participate in the DAO. You get all this yield that is, it's a little complex, but it's got this really elegant economics to it, or what we hope are elegant economics that uh, create the right incentives around bank runs, if that makes sense. So you've got just to summarize, you have the field, which is the lending facility, which creates like the theoretical fundamental underlying driver of demand for beans and its stability. And then you have the silo where everyone can take their beans and deposit them to earn passive interest. And if we go back to, you asked like, what is beans at the beginning, or what is Beanstalk? The goal is to create a low volatility money with competitive carrying costs. So the low volatility really comes from the field fundamentally, and then the competitive carrying costs come from the ability to deposit while you're holding the money. You're already taking the risk of holding exposure to Beanstalk. You can then put your money into Beanstalk, into the silo, and earn the risk-free interest rate, if that makes sense. So it would be like if your US dollars, came with the federal funds rate or something.
Okay. I have to be honest, it's funny. This is completely different from what my guess or what I was expecting. Like when I saw stablecoin backed by credit, I was thinking you guys might have built something off of like Maker or Aave or some like existing lending protocol where the debt or the credit for certain assets was like backing. So this is definitely throwing me for a loop. But I'm getting a clearer picture. So maybe let's actually zoom out and kind of go back to the beginning now that I have a much better understanding, honestly. And just go back to like the kind of core question. And you can answer this however you want. I think like I'll be more able to follow along. So if whether it's an investor or let's say a regulator comes to you and they're just like, so what is Bean backed by? Like, why does Bean have a value? I think that's obviously the golden question of any stable coin. So let's just return to that question and try and walk me through that. And I might jump in and like nitpick and stuff, but that's just how I'm going to figure this all out.
Sure. So beans are worth whatever the market says they're worth. So
Yep.
what that means in practice is like whatever people are willing to buy and sell beans for, really buy whatever price they're willing to buy them for. You can think of as like the one way to think about where does the value come from. Well, if people are willing to buy it at this price, it's got that
Yep.
value. Now,
Yep.
why would anyone want to buy it at any price? Well, there's some like risk adjusted return that you can take for participating in the system based on your analysis of, the likelihood of the bean supply increasing to a certain amount over a certain period of time. And that's where the value of a bean comes from.
Okay. So then my follow-up question there would be, I don't understand how just assuming there will be more of something in the future gives it any value. I do follow you with like, the only reason anything has any value obviously just comes from people buying it. Perfect example is Tether. Nobody has any idea what backs it, where the dollars are, but so long as people are down to buy it for $1, it effectively is.
So when you put it that way, like it is as stupid simple as that, but like Beanstalk is a little more sophisticated. So the like logic train works as the beans have value if people, if there's demand for pods. Pods have value if there is some future demand for beans exceeding some amount, because each pod becomes redeemable for a bean at an exact supply. So like this pod at this bean supply will become worth a bean. So the concept is the demand for pods comes from that calculation of like what is the time weighted likelihood or the likelihood over time of the bean supply reaching X, and that is non-zero. Like it could be zero. That would be what it means for the system to go bankrupt. Right. But it's like that is the dynamic. It's like beans are valuable because there's demand for pods. Pods are valuable because there's potentially demand for beans. Beans are valuable because there's demand for pods. So it is very circular, and it's important to acknowledge that.
Yeah, because like I'm very much enjoying this combo, and you seem super intelligent, but obviously that sounds super Ponzi-ish. Like that just like at sort of circular like that. Like, so there's the only 4 tokens or the only tokens involved in the Beanstalk system are your own. There's no like real money coming in anywhere, or do people
this is
have
the liquidity, right? So you can deposit liquidity pool tokens in the silo.
Or let me ask this actually, if I just as an outsider right now, if I want to get some beans, I assume obviously I could buy it on like Uniswap, I assume, right?
Curve at the moment, but sure.
Curve. Yep. Or how would I get them through like using the system?
That is getting them through the system.
The only way in is to buy them on the open market.
Correct.
You can't like take some asset to the protocol or the silo and do anything to get beans.
Correct. This is actually one of the reasons why like
that actually kind of makes sense. Yeah.
People have like a hard time with this, particularly like VCs, where it's like, well, how do we buy the thing?
Because it's not even like you guys are the one selling them on Curve. It's just
no one's selling it. It's just it's the system.
It's literally the market. Right.
It's the market. So this.
Well, actually, no. Here is a question. Does like
go for it.
Does the Beanstalk protocol itself actually participate in Curve and lend, or is it all your users?
It's just users, and they're not even our users. It's Beanstalk's users, but it's just the protocol.
Oh, that's what I mean. Yeah.
The protocol is totally neutral. Like it doesn't.
So wait, how did those people get beans in the first place then?
They bought them.
Well, the first 100, but like
100 beans were minted when the protocol was deployed, and
just like airdropped or kept with the team, and like then you sold them, and it kind of grew from there.
The Publius wallet deployed the contract, got the 100 beans, and then deployed the initial liquidity. So it matched the 100 beans with Ether and deployed the initial liquidity to seed the system. And everything has gone from there.
Okay. Yeah, that is a bit of a mind fuck, but I am following
0 to 1, baby. 0 to 1.
So right. So literally, like with the way the system's designed, if you guys hadn't manually given yourself those 100 initial beans and put them on the open market, it like couldn't have grown. It's a closed loop system outside of that one like starting point, right?
Correct. That is the setup.
Okay.
And from there, everything blossomed. So it was like that was August 2021, 100 beans, and over the next 9 months, it grew to like $100 million, 107 million beans or something, and like $77 million in liquidity. So it was like a $200 million inflow, if you will.
Yeah, this one must be a real hard pitch to VCs, huh?
Yeah, they don't like it. It's like, yeah, you can participate like everybody else. Welcome to the club. And they're like, what?
Interesting. Yeah,
Yeah.
it just like it's making sense, but I also still absolutely don't understand it. Like, what's the guarantee that anyone would want to buy them in the future? Because saying
There's
the
no
guarantee,
guarantee.
right?
No guarantee.
But like again, you could say that with anything technically.
Yep.
But most things have a likelihood that they would because they provide some sort of like external value. But I guess in your
Some
case,
utility.
that value might be the utility of being a stable coin. Like if people simply want that to exist bad enough, that is the incentive to keep the system going, kind of.
Totally correct. And it is it is a circular loop. It is a self-fulfilling prophecy, but like that is what it means to create endogenous value. Like that is what it means to create something that is internally valuable in and of itself. Like Bitcoin makes the same assumption. The Bitcoin network is only secure if people hold value in Bitcoin.
Wait, so does that also mean in a way, like outside of something like the stock exploit, which is just like kind of a almost simple, just 51% thing, like is there no real way to financially attack Bean? Because like an outside
No, you can.
investor,
You can buy a huge chunk in the system, start a growth cycle, and then dump all of it and start a debt cycle. But that's all you can do. You can buy in.
So what that would look like is I would just go to Curve. I would get a shitload of Bean. I would put those in a silo to get. Wait. Yes. Okay. To get like seed and stock, and then in the future, when I've accrued a bunch of beans,
you just pump the price.
Dump it.
The price is now up. The system's printing. Yeah. All that stock will now yield you more beans, and everyone else will get more beans too. Right. But the point is, you then dump everything that you just bought, and that money comes in, money goes out, price went up, price went down, and actually that happens all the time, like all the time. Like that's the that's the thing that happens. People come in, they leave. Depending on size, there's a certain amount of volatility, but like that's the model. That's exactly what's happening.
I think so far we've kind of focused, or at least maybe it's just in my mind, a lot of these examples we've been talking through have been like sort of single events, like whether when you look at your chart, there's, that one crazy spike, the drop, the return, this example we just went through. But can you maybe break down what's been going on like the past few months? Because when you look at your chart, it looks like just a slow trickle below, like away from $1 down to, I think you're in like the 80-cent range right now. So like,
I think it's like 92 cents, although it could be in the 80s.
It might be.
Exact price doesn't actually matter, right? In this case, it's like, well, it's just a debt
and when you
cycle.
say that, you mean right now, right?
Yeah,
like long term.
If the price stayed in the 80s forever, that would not be.
That would actually that would be fine because that would effectively be stable. But
good, better, best. It's like that's not really the goal. If it can keep the price at 80 cents, it should be able to keep the price at $1 if it's well designed.
Yes.
So it's like,
but okay. So what's been going on the past couple months, and then also with that, walk me through like what the system is doing to try and like repeg. Yeah.
So let's resume the timeline. So exploit happens in April. All the liquidity that is trading against beans is stolen. So the value of beans, like the market price, comes from the liquidity in the AMMs that it's trading against. $77 million trading against beans at the time of the exploit, that goes to zero. There's now no value trading against beans. The bean price goes to zero. So the beans there's 100 million beans, they're all worthless. We go back to the fundamental assumption that a user of Beanstalk is making is that the system is credit worthy. What does that mean? It means that the system is going to be able to borrow money from the market. So what is the natural response to the ultimate bank run, if you will? It's to issue debt to try to recapitalize the system. So it took about 4 months for Beanstalk to be turned back on and a recapitalization to be structured and agreed upon by the DAO and implemented. But exploit happened in April. In August, actually on the 1-year anniversary of the deployment of Beanstalk, Beanstalk was turned back on. And while there was about $77 million of value stolen, only about 20% of it was originally recapitalized, which was good, not great. It was turned back on in August. There was initially a little bit of that money coming in and then money going out phenomenon and volatility, but basically the system has just been chilling out for the most part since there's some initial price discovery and movement of assets between parties after the system was turned back on and there was price discovery. At this point, the system is sort of in an equilibrium state where there's nothing really happening, and from a demand changing or people pricing things changing, and so there is very little money coming in and very little money coming out. And in a vacuum, you'd expect then the price to stay the same, but as you observe, the price has been coming down slightly. So there is the DAO has decided through governance to mint beans to fund development of Beanstalk. So Beanstalk Farms is one of those organizations that has been funded by the DAO, and the majority of sell pressure over the past 6 months has come from people that have been paid in beans to work on beans that are liquidating a portion of those beans. And so it's the system is generally in an equilibrium state, except for there is some new marginal supply coming from the payment to contributors, which is getting sold. So that has resulted in the price coming down slightly.
So I think what you've effectively done is created a closed loop system that can only be as big as the net amount of money in versus money out. But at the same time, doing it in a way so that when money goes in, it doesn't actually go into the system. It just goes into some private wallet to be used wherever else in the Ethereum ecosystem. Is that kind of an accurate assessment? Am I understanding this right?
Well, I think
because the price trickling down right now comes from the simple fact that there is more money leaving the system than coming in right now, which is just how any closed loop system works. But what's the interesting part that took me a while to get my head around is for money to go into the system, money doesn't actually go into the system. If I was selling, but it does in a way.
Because when you buy the beans with Ether, let's call it, or 3Curve, you're adding 3Curve to the system, to the liquidity pool.
Yeah,
but
okay. Actually, I guess the part I was maybe missing is you have to consider the curve pool as part of the core bean system.
Well, it's this is actually the thing you were saying around taking it in a private wallet. You as a user still own your liquidity pool tokens, right? But those tokens are serving a communal value by providing liquidity to people to buy and sell the beans.
That's the part I think I was kind of missing, right? So even though it is not part of your contracts, when talking about the bean system, any LP pools you're part of, in this case just Curve, is a fundamental part of this. So if you want to answer the question to someone who's where is the money in the system that's backing it, you can kind of just say in the Curve LP pool. That's Correct. Where you can tell. Yeah, okay.
Correct. But it's not backing it. It's important to say it's not backing it because it's not collateral that can be redeemed.
But it's literally something just in liquidity. The system. Yes, it's liquidity. That's a better word.
Liquidity. Yep. It's this is, what can I get for it? Well, what's the liquidity? There's no redemption value. It's just a liquidation value. And the liquidity comes from the AMMs.
Okay, cool. Okay, so that makes sense.
So to resume, maybe just to wrap up, what's going on at the moment. Yep. So Beanstalk is up and running, but the on-chain governance, which was exploited, has been removed. There are, in addition to re-implementing on-chain governance to get to a fully permissionless system again, there are some additional economic improvements that can be made to the model. And, they're all of varying levels of complexity and in terms of economics and technical implementation. And so there's, marginal benefits to each of them, some more beneficial than others. But the point is, there's like a huge set of developers and community working on designing and implementing upgrades to Beanstalk itself. And we, as like the initial founders, feel very lucky to get to participate with an incredible group and figuring a lot of that stuff out and implementing it, which has really been a rewarding thing for us. But at this point, like the scope of the work that the Beanstalk community is engaged in has expanded dramatically because the integration of Beanstalk with DeFi such that beans can actually start to be used is going to be a pretty big project. And one of the reasons for that, maybe just to give one, is that DeFi doesn't really support 1155 tokens, and the non-fungibility of silo deposits and pods makes them, they'll likely be implemented as 1155s. And so in order to get, Beanstalk assets to be tradable and borrowable in DeFi, there's a need to implement a lot of DeFi native or DeFi primitives that support 1155s natively. So there's a lot of cool development work happening on like a zero fee composable DEX where you can compose like an arbitrary pricing function with an arbitrary on-chain oracle, stuff like that. There's a lot of cool development happening, not just on Beanstalk as an issuer of money, but around Beanstalk that should be, generally positive contributions to the EVM.
Yeah, actually, I noticed, I think, which one of your bios was it? Someone's bio in the Beanstalk community. Where was it? Oh, yeah, Beanstalk Farms. Working on Beanstalk Money and EVM pipeline. Yeah. Cool. Okay. Shit, what was I gonna ask? Yeah, okay. So I'm just on app.bean.money right now. And like I have a few questions just about what I'm seeing here. I think the first one would be, and this could just be a simple like chart just not set up right thing, because like the liquidity chart basically looks like a flat line. Why does the like market cap chart look so different from the price chart? Like, how has the market cap been dropping in the way that it looks like on this graph here when the price has not been dropping same? Are there beans being destroyed? Like, is the circulating amount of beans going down somehow?
So let me try to pull up
it could literally just be
about.
Yeah.
But the short answer is when beans are sown, they do get destroyed.
The market cap chart just looks very like choppy. Like there are obviously big sell events or big buy events, but then the price chart, for example, it's kind of a flat line, but it looks far smoother. Like it's a smooth trend down. And so that just makes me wonder about circulating supply.
Yeah, the punchline is that I believe the jumps in market cap have come from some of those BIPs, Beanstalk improvement proposals, that mint beans to fund development, for example.
Okay, yep.
And so it's like if you normalize for that, it would likely look a lot closer to the price line.
Okay, cool. Yeah.
I'm thinking out loud, but I think that's what that is.
Yeah, I mean, it's hard to tell just because the price chart and the liquidity chart, the y-axis doesn't seem to like auto adjust. So they basically look like flat lines. So they could actually be similar and I just can't really see it. My second question just on here though is there a fifth token in the system, or is this just like nomenclature for something when we say unripe bean? Is that just sort of, yeah.
Yeah, so we haven't even talked about the barn. So there's the field, the credit facility, the silo, which is the bank, and then the barn, which is the recapitalization facility. So we mentioned that there was this whole plan to recapitalize the system after the exploit. There was a new facility, which should be hopefully a one-time temporary recapitalization facility that actually has a number of additional assets to it that, I'll throw out the names just for memes, but we probably shouldn't get into because it's only so substantive. There's fertilizer, there is sprouts, and then there is unripe deposits. I guess ripe assets underneath the deposits. So it's a little cockamamie, but it's
Okay,
yeah.
so I think one of the reasons that caught my eye, the biggest number here on the bean supply is unripe bean 3 curve LP token.
Yeah.
So like, do you want to try and break that down for me?
Sure. So let's look at these 4 numbers. There's
we can take it from the top.
35 million beans, 26 and change million bean 3 curve LP, 76 million unripe beans, and 119 million unripe bean 3 curve LP.
Mm-hmm.
The unripe beans and unripe LP basically this isn't perfect, but it basically maps to the assets before the exploit. So there's about $200 million in market cap before the exploit. There's about $200 million in unripe assets. So if you had a bean worth of value before the exploit, you've now got a bean worth of unripe assets. It may be bean or bean 3 curve LP, depending on what you held and what you've been doing since. But the point is that the unripe assets are tokens that represent ownership of beans before the exploit.
Oh.
Those unripe assets are entitled to some portion of the assets that have been lent to Beanstalk to recapitalize the system. And so it's like the unripe assets map to some value that they can claim, which is a function of the first 2 values, the amount of beans that currently exist and the bean 3 curve LP that currently exists. So if you look
when you say, this is like a temporary thing, right? This is not something that would exist if it weren't for the exploit. This isn't like a core part of the system long term. Gotcha.
And it's something that you would expect around 2 billion or so for the system to effectively to graduate.
Actually, it's kind of interesting that you wouldn't have something like this had the exploit not happened, because should you guys succeed in the long term, you have this thing this system, should something ever happen again. But then B, obviously you've just proven that the system is resilient enough to withstand an exploit of that magnitude.
Exactly. And this is actually the same counterintuitive logic that applies like to right now. It's like the system is at 92 cents, which you described as like a way off peg, but it's like, which is fair. It is true. It's way off peg. But on the other hand, compared to 24 cents, it's actually not way off peg. Compared to 80 cents even, it's not that bad. And in the context of, grant, and this may be wrong, but grant that at some point the system starts churning again, every second that it's spent here below peg for an extended period of time should be good data for people to have confidence in the system the next time around.
Yeah, right. Like, it is proven it can spend this long under peg, and it's not.
And credit
inherently
is like
detrimental.
A faith-based system. It's a faith-based system. So the idea that there is data that should lead reasonable people to have faith is like, it's counterintuitive, but it's like, not being perfect is actually what the system wants. And this is why, maybe to sort of like wrap up the comparison with most other stables, it's like Beanstalk doesn't make any promise about the value of beans, whereas Terra made a promise about the value of UST. And like, once you break the buck the first time and you have this promise, the model is always fucked.
Yes.
So there becomes there becomes a way to fuck the model. It's like, well, if you get to this, point, or then you like, it's a Schelling point where after that, like everything collapses by saying there is no promise about the bean price. The bean price can be anything. Beanstalk actually, if you're going to try to like attack the system, takes away your biggest weapon, right? Your biggest weapon is the depeg. But in the case of Beanstalk, the depeg is par for the course. And the depeg, unless you actually kill the system in the depeg, makes it even stronger next time.
Interesting. Yeah.
Also, just to chime in real quick, the point per bean supply at which Beanstalk would graduate from the barn is more like 500 million, not 2 billion. 2 billion would be if you sow beans and get pods at the end of the line.
Good shout, guys. Sorry for misspeaking there. Yeah, great shout.
Cool.
Also, while I'm at it, I have to run at the 30-minute mark. Not sure about Publius's availability, but just a heads up. But this is great.
Yeah, I saw your
This has been
message.
awesome.
Yeah, we can wrap up soonish here. Jimmy just left, which is funny. We just had someone requesting to speak who is usually just a massive troll. We honestly don't let him up often, but every now and then has some good questions, and I was going to let him up because I think he would have had insight, but I think I took too long and he figured I was just ignoring him. So that's too bad. Okay, interesting. This is all like... This is one of those things where even though I kind of understand it now, like I could go give a simplified version of this to someone after this call if they wanted. It's still just kind of fundamentally so different from existing systems that I'm very much second guessing. I'm like, wait, okay, do I actually have my mind wrapped around it? It's definitely one of... This is like actually for me the example of the fascinating type of shit that you can do with like this distributed ledger tech, be it blockchain or whatever else. I don't even know how to quite put into words what I mean, but it's this weird abstraction of various values and functions and systems from traditional financial systems kind of put together in a way that I don't even think would be possible for someone to look down or sit down and be like, is this going to work long term or not? It kind of just needs to be tested and see. And I'm sure I'm pretty ignorant in saying that, but it's just really fascinating. Like, this has been a really interesting call. Yeah.
That's why we are comfortable working, on this experiment that may fail. It's because like fundamentally the only way to even test this stuff is out. Like the theory only goes so far. Like these are behavioral systems. And to your point about like this is an implementation of like some of the crazy stuff you can create, you can think of it as like the product of appreciating the Ethereum network as a blank canvas. Like we took it as a blank canvas to solve like a fundamental problem where you can encode whatever rules you can think of that solve the problem. And it's like there's a lot of big problems that need outside of the box solutions today. And we recognize
this is certainly outside of the box.
Yeah, this may not be like the solution to the problem, but we really do feel like this is in the direction of...
Yes. At the very least, it's a step. It's a good step.
And frankly, like that's all. We're just trying to take the next step, and it's like hopefully we take the next step after that. And when we say we mean like collectively, like everyone that's on the Beanstalk train at this point, or a part of the DAO, however you want to think about it. Yeah, the goal is to like just make the next step, and then we go from there. Because it's too big of a problem to be like, yeah, we're going to solve every single part of the problem right now.
So I guess one of my last big questions would kind of be a more open-ended, like for the future one. I don't even know if it'd be possible with the exact current model because the curve pool is such a crucial part of the system. But like the way this is all set up is it's kind of taking the idea that I think Luna like half embraced with the UST mechanic of as long as there's a buyer for something, it has value. Just like as simple as that, kind of like what I said about Tether earlier. But it's just going full force with it to kind of create almost like a pure form of money that's driven and backed by the only thing money's even used for in the first place, just buying and selling. And so it makes me wonder if you might want to expand in the future, or alter rather, to not be USD pegged. Be some kind of stable store of value, whatever that might mean, but that is just stable in its own right. And I don't know what that would look like, but like I know a lot of people have turned the discussion on recently about like, should we be pegging everything to the USD? It's certainly convenient, but does it actually offer the long-term benefits we're looking for? Blah, blah, blah. What are your thoughts on that? Like USD peg in general?
So if you think about like each bean as a liability of the system, this goes back to like businesses wanting to denominate their loans in things that are inflationary or low volatility versus highly deflationary.
Yeah.
Like in theory, you could have a version of Beanstalk pegged to Bitcoin, but it's like that's going to be a way harder peg to keep than something inflationary like the dollar. And
right. Because of the way you work, you actually benefit from the thing that you're tracking being inflationary in a way.
At the margin, certainly.
Yeah.
And so it's like, even if the model may be good enough to work for one like asset with a given rate of inflation, it may not work for another one that's highly deflationary like Bitcoin. And so given that, this goes back to like the experimentation that is happening in real time. There's an open question as to whether there will be in the future multiple Beanstalk that each have an asset, a stable coin that is pegged to some different index of value, right? It could be the CPI, it could be something better than the CPI, it could be Bitcoin, it could be a stock, it could be anything. Or whether it's more likely that Beanstalk moves in the direction of having beans that are pegged to dollars and the CPI and other stuff, and it's all backed by one
It's all
credit.
kind of arbitrary in a way.
Well, it's not just arbitrary. It's like whether or not, like the system could in theory support an arbitrary peg. The question that's interesting is, will it be one credit, one version of Beanstalk that supports all the pegs?
Yeah.
Or will it be N versions
multiple
of Beanstalk
deployments
that support N credits or something in between, right? Or some versions of Beanstalk support multiple. We don't know. So it really does feel like this is the beginning of an incredible period of discovery around this. And, to this point, we really don't feel like there's been particularly since Terra collapsed 10 months ago, there has not been a lot of discourse on any of this stuff. People are not participating in discussion. And so we really do want to do our part to like raise our voices a little bit more such that people start resuming these conversations, because as I'm sure you can tell, when you get into the weeds, there's some really interesting and meaningful intellectual questions to like try to answer. Like this
there's some like philosophical debates to be had here.
Yeah, it's a fun space to live in, and no one is doing it because it's scary. So and the last group that did it pretty well blew up. It's scary stuff.
Yeah. Okay, so I have two last little technical questions, and then we can just wrap up with a couple like more fun or lighter-hearted ones. Mainly center around that curve pool, because now the full system kind of makes sense to me. The pictures coming together. What curve pool is Bean in? And like I assume it's its own. What are the two other assets in it, or one other, or three other, or however many?
It's just Bean. It's Bean 3 curve with an A parameter of 1.
So I'm not super familiar with curve to know what that means. So does that mean it's paired with
there's a 3 pool between DAI, Tether, and USDC. 3 curve is the LP token for that pool.
Okay, so it's that versus
it's like a meta pool. Yeah, it's the meta pool pair.
Okay, yeah, I'm familiar with like how curve works, just not some of the terminology. Okay, cool. So then that pool, the 3 curve pool and Bean pool, what is someone's incentive to take their beans and put it in that pool instead of, let's say, the silo?
So you can deposit the LP token in the silo, and this is actually where we get to like marginal incentives. The number of seeds that you receive depends on the token that you deposit.
The
And
L-
so, whereas
mm,
right now, and this goes to like the system is depegged right now because the incentives around beans versus LP is like not perfect. It's static, and there's this inefficiency around facilitating conversions between LP and beans. And one future improvement to the system that has been much discussed is having variable seeds per BDV, such that there can be some sort of like automatic monetary policy change, or like maybe this is not monetary policy, but some change in real
mhm.
time or close to real time in terms of seeds per BDV that should help contribute to peg maintenance by changing the marginal benefit of depositing an LP token versus just a bean.
Right. Okay. And so the LP pool itself doesn't have native incentives. Rather, it's just that you can take the LP token and put it in the silo for.
Correct. And in
Yep.
fact,
Okay.
whereas providing curve LP, like I guess you can technically get some curve rewards, the cost that
Yeah. The
creates that in the form of
minimal.
the fee is not worth it to Beanstalk, because
Yeah.
the fee to trade creates this inefficiency around the peg. So the Beanstalk DEX that is being developed doesn't have a fee. So hopefully soon there will be zero fee trading in beans. There's no spread
Okay.
taken by the AMM.
Okay. Okay. Gotcha. So then I guess my last technical question would be actually, I guess it's kind of a 2-in-1. So, what I'm about to ask and kind of talk through, and you can jump in and correct me whenever, is how someone might like set themselves up and get into the system, the steps they would take. But then 2, I guess the like bonus question wrapped in is I would probably just go buy some beans for the hell of it after this. I think it's interesting enough. Probably wouldn't be a ton at first. I would do the whole system we're about to go through. If it wasn't on Ethereum. Do you guys have any plans to go to a cheaper, faster chain in the future, or even just like one of the L2s of Ethereum? Or like I just don't use Ethereum anymore.
Yeah, it's a great question. So the punchline is the goal is to facilitate the access to the economics of Beanstalk everywhere while minimizing the compromise in censorship resistance of the base layer issuer of money. And if you think about where the Ethereum roadmap is going in terms of becoming more of a data availability layer that is settled to, one can imagine Beanstalk ultimately settling to mainnet or the data availability layer, but ultimately having the majority of transactions that are processing Beanstalk assets happening in one or more rollups. And then there's a separate question as to how to bridge those assets across other networks. And
Well,
that
I'm
go
also
ahead.
just trying to figure out, like in your current setup, I feel like cross-chain, like bridging stuff wouldn't work because, like, let's say we wanted to get Bean in the Cosmos here. You would basically have to bridge over a bunch of Bean through one of our Axelar bridges and like set up a liquidity pool on Osmosis, let's say, which is one of the dexes here. But like, why would you ever want to do that? Because it's not the curve pool, it's not efficient. You can't take that LP token and go like, and also it's just
Exactly.
is
You're exactly
it
right.
could someone go just open up a bean pool on Uniswap? There's nothing that's stopping someone from doing so, right?
Correct. Anyone can always deploy a pool, but there's a question of will that pool be whitelisted for deposit in the silo by the DAO?
Oh, so that would be maybe the missing piece is like if we were to do something like that example, basically you would whitelist the Osmosis LP token through the bridge of choice to work with the silo. Like in
Correct.
the
So you
theoretical
could
world.
do it. You
Okay.
could bridge the beans, add the LP, bridge the LP back, and then deposit the LP. Like things like that
Mm.
can start to happen. But um,
But why not just do like a whole new deployment maybe
well,
for each
this
chain? Is that
this is the issue. If you have a whole new deployment, you are likely splitting the credit
yeah.
of the
Yep.
system. And so like these are the fundamental economics questions. It's like, well, do you just deploy, you know, Do you deploy separate versions? Do you spend the time to try to integrate the versions across all the environments? It's probably going to end up being that you have
So,
some groups doing one and some groups doing the other.
how familiar are you with IBC? And then I'm not familiar with this next one, but like the way Polkadot and or Avalanche like sub things work. The reason I ask is because like here in the Cosmos, our chains aren't connected with bridges, so to speak, as the bridges are built into the chain at a base level. And so what's starting to roll out now is like actual smart contract cross communication between chains. So like let's pretend Ethereum was a Cosmos chain, or let's just pretend we're 2 years in the future and Ethereum is turned on IBC, which there are teams working to do. In theory, then you could still have it all be automated and decentralized and like not have to trust a bridge, because your deployment on Osmosis could just easily talk to the main silo, even if that's on a different chain. Are you kind of like A, at all aware about that stuff in Cosmos, or B, explored like Polkadot and Avalanche as other potential options for that sort of setup? Or maybe I'm totally missing something, but
Yeah, we're in the process of really trying to do our homework to figure out like what the 3 to 5 year integration with all the networks and rollups looks like. Would say that thus far, the thing that stands out as the most compelling direction to take here is around shared security, and have found a lot of the work happening with Eigenlayer to be incredibly compelling, because ultimately, I mean, here's where we see this going. The goal is to facilitate real economic activity in any cryptocurrency. If beans are the best cryptocurrency, maybe the economic activity will happen in beans. But you can't have real economic activity in beans only. You have to have the ability for economic activity to happen in a permissionless setting. And currently,
wait, I have to build off that point real quick.
Yeah.
So, like just saying, maybe it won't happen in beans. What is the deal with the name choice for something that hopes to be taken very seriously and big one day? And is it at all paying homage to like the first pseudo cryptocurrency, Beans, like that came before Bitcoin? I think it's just like some company ran it. Do you know about that? Is this related at all? Or
first time hearing about that.
yeah, so just look up like Beans internet money. It's just some like, it wasn't decentralized, it wasn't on a blockchain, but it basically functioned like Bitcoin, some like company ran, some Reddit precursor or something. I forget exactly. But yeah, what's up with the name? Like, I like it. I kind of like the whole barn stock thing. It even sort of works in a way, like when I think of seeds or pods growing into stuff.
Come on, man, don't sell us short. It's pretty good. It's pretty good.
No, it's actually very good. Yeah.
I'm bald.
No, it is.
So the reality is that, like, at this point, it's very easy to explain how like nice the memes work and like meaningful the meme has been to creating a great community. And like it'd be great to like be able to say like, oh, in advance, like we really wanted the memes to be A+, and we knew that would be essential. I think that would probably be giving us too much of the benefit of the doubt. Where does the name Beanstalk come from? Sort of unclear. In fact, the moment where the name, you're sitting down trying to write the white paper, the moment Beanstalk came into my mind, I literally thought like, people are going to want to know why Beanstalk, and we're not going to have a good answer. But that was just the working title. And
what the hell does dollar mean, right? Like, I know it has Latin roots, but it's all just a word.
As we started to go through and design the system, we faced like this fundamental issue around, there are all these new assets. Talk about blank canvas. There are these new primitives being created that don't exactly map to a bond, don't exactly map to equity, don't exactly map to like what is a seed, right? So the concept is, it really as we started to fill in the words and need words and fill them in with these like farm themed terminology, it started to create this whole like a larger story that very clearly, once you like internalize the names, help you deeply understand what is going on. And
Yeah,
that
they
has been
do.
incredibly valuable when it comes to creating a sticky community. So harder to say like where it really comes from. I mean, I do like the
Rather
idea of
just
like
describe how it fits.
spending beans. Oh yeah, how many beans did that cost? Like that rolls off
Yeah.
the tongue.
No, there's a
Um,
reason that this like other thing I mentioned, pick beans. There is some weird.
yeah,
It
it's a
must be
good.
some piece of no. There must be some piece of history we all have heard about once or whatever, where like were beans used as money at some point? Like there is some connection there.
Yeah,
I don't know why.
it does seem fundamental, right? Like
Yeah, I can't
it's so
explain it.
natural, and this is kind of the thing. Like it just worked. It really did just work.
Oh, by the way, the thing I was thinking of, if you want to look it up, it's BEENZ, beans.
All right.
Might be interesting history to dig into there. But okay, cool. So let's circle back to my last technical question that I diverted from. So I think I might actually get some bean. Like, fuck it, I'll put some money on Ethereum just because it's interesting enough. Assuming the fees don't piss me off too bad when I see that MetaMask pop up. But so tell me, just jump in here at any point if you want to correct me. But here's like what I would do just based off our conversation. So like, let's see if I have a good understanding. I would go to Curve. First I would acquire some 3-pool LP token, Curve 3-pool LP through just whatever market I could get that on. I would use that to buy some beans. I would then take those beans and put them in the liquidity pool again. I would match it with some 3 curve.
Just to cut you off, you could just simplify that by just adding like the initial value to the 3 curve pool and getting the LP tokens instead of buying and adding. But yes, like the point is acquire the LP token with value and then deposit it.
Okay, cool. Yeah, the only reason I didn't say that is because before I thought through it, I was going to take the beans over to the silo. But no, first I'll actually use the beans in the LP pool, take the new LP token, which represents beans, and the 3 curve LP pool token to the silo and deposit it there, where I will then get seeds and stock. At that point, am I kind of just in like a hold and wait phase? Or is there something for me to do with those?
It's passive. It's passive.
It's okay. So yeah,
there just a caveat. Like there is a like micro farming in the silo. You can like because the basically because of gas reasons, not all of the interest is auto compounding. So there's some things that you have to pay gas to start to compound, but it's like now we're getting into the super micro optimization.
Yeah. Okay.
Yield farming.
Okay. Cool. But no, that's like a good sort of, and then so let's say, is that what you would recommend doing, just like as a user, or would you recommend rather taking the beans and bringing them to the silo? Like maybe break down the difference there for me.
Yeah, so we don't, make recommendations.
I'm asking you not as a project person, as full disclosure, no worries.
It's like what we try to do is comment on like we can speak to like here are the incentives that exist.
Yeah, totally.
The point is that like Beanstalk will pay you a premium to deposit LP tokens over beans. So if you are going to be in the silo, there's some marginal, return that you would have to forfeit for depositing beans instead of LP tokens. Now, you may decide for whatever reason you want the bean exposure and not the 3 curve exposure, but it's like,
okay, so I was just about to ask, why is that even an option? Why not just disable depositing regular bean to the silo? But is that maybe the answer, that you want people to at least have that option if they maybe don't trust the other stables in the
and it's like that's the money. Pool? Like you have to be.
But then wait, if that token fails, isn't bean fucked?
Yes. So this is actually why having a diverse set of assets that beans trade against is like very, very, very important. And now we're going to go on a slightly different tangent, but the reason why there's not a lot of liquidity or different assets trading against Bean right now is in the post-merge environment. There's multi-block MEV, and all of the on-chain oracles in Curve and Uniswap basically are not multi-block MEV resistant. And so there's this sort of like janky patchwork solution on the Bean 3 Curve oracle for now, but there's been a ton of work happening on this DEX that has an on-chain multi-block MEV resistant oracle that will, once that is, and it's currently under audit, once that is deployed, you can expect like a Bean ETH pool and maybe a bunch of other pools as well.
Okay, gotcha. So
there's risk
in
everywhere.
some
Risk
way,
in centralization of exposure, risk in the oracles. It's
so in some way, actually having everything relying on that one LP pool is a kind of temporary weak point. Like that's something you hope to grow away from. That makes sense. Okay. Okay, cool.
And you can imagine a future version of the seed like gauge system that's changing the seeds for BDV to factor in things like aggregate exposure to a single token, to a single custodian, to a single asset issuer. Like risk management can be encoded at the protocol level.
Yeah. You know, it's crazy. For the first maybe like 20 minutes of our convo, I was growing a little skeptical because I'm a huge believer, just because you're one of the founding developers, I'm a huge believer in the whole, like, if you can't explain it simply, you either don't understand it enough or it's a scam. But now kind of getting into everything, you kind of can't explain this one simply because it really is it's something that hasn't been possible or existed before until like we've had this sort of decentralized infrastructure to do it.
I think that's, we appreciate you saying that because it's as simple as humanly possible. Like we really believe there's no,
but it's also not
here.
It's funny.
It's as simple as it could be and no more complicated, but at the same time, it's really fucking complicated. And we acknowledge that. So
yeah, I think honestly, sometimes the complexity of existing systems might be lost on us because they're the norm. Like it's not like traditional financial systems are simple and straightforward.
Well, this is the thing. It's like the current financial system is way more complicated than Beanstalk.
Oh, yeah.
Beanstalk is like the reduction of like 100 layers of finance into one or two.
So if I were, this is just me sort of like thinking out loud now. I think we're definitely getting towards wrapping up. But if I were like in your shoes, I would feel like one of my priorities, or even just as like a potential about to be investor, would be making the second LP pool that is like whitelisted in the silo, being one against blue chip, non-stable assets. Because it's kind of interesting doing I think the number one criticism of DAI for a while, right, was that it's just wrapped USDC. We have a stable coin here in the Cosmos, which is like 80% backed by USDT, USDC, and DAI. It's like, what is the point there? And in some way, your system currently actually has the same issue. Like it is reliant on other stables succeeding. So what's your sort of plan moving forward?
Not other stables, it's just other value on chain. So interestingly, now
wouldn't it be DAI, USDC, and USDT? Because if something happens to one of those and the Curve 3 pool gets in trouble, then suddenly half of your pool's in trouble.
Hopefully it's going to be trading against Ether and WBTC and a bunch of other stuff.
Yeah, okay, so that's what I was saying. That's like that's probably the next move is a non-stable LP pool.
That there should be a Bean ETH pool, God willing, before the end of Q2.
Okay, cool. Very cool. Sweet. Okay, so there is some more stuff I could maybe dig into, but I think like this is probably a good place to wrap it up. We're going on 2 hours. I feel like I understand Bean enough where I might go throw a couple dollars at it, which is saying a lot given the complexity. Or not even complexity. I get what you mean. It's as simple as possible. It's complex probably isn't the right word. Just like fundamentally different. So you kind of need to approach it and think about it a different way. I'll throw a fun question at you.
Definitely different.
I'll throw a fun question out to maybe end it on. What's with the little Bean NFTs? Give me the inside scoop there. I see a bunch of beans in the audience.
Yeah, so the Bean NFTs were originally an idea to try to like facilitate some sort of like community when the price was collapsing from $4 to 24 cents, and it was like sort of a, I think it speaks to like how down bad the protocol was, that it's an economics protocol, and it was like, what's the best thing to do here? Like maybe make some PFPs, like kind of ridiculous.
Yeah.
But on the other hand, going back to like this is fundamentally a social phenomenon and a faith-based system, like the PFPs were amazing, because like the way to get the PFP was to participate in the repeg. That actually worked pretty well, and that created like a culture around. There were different tiers of BNFTs.
Hold on.
It created
I really don't mean to interrupt, but I don't want to lose this thought. You just, for some reason, saying faith-based system there kind of just gave me a revelation moment where I somewhat just became a bit of a bean bull, actually, I think. Because, like, the thing I was skeptical most up until just a second ago, or rather couldn't get my head around, I don't know if skeptical is like the whole, it's really going all in on the faith. That's what's backing it, is that someone will buy Bean in the future and that they'll have something to it. But like, I'm just realizing that is literally all any money is. Like, I gave a Tether example earlier, which was kind of limited because Tether obviously runs on that, but so does the actual US dollar. Like, it is purely just that because of US's military and, economic standing, that you have faith that dollar has value. Like, there is nothing else to it anymore. There's no gold standard. So
or Bitcoin or Ether or any other money. Like, this is what it means to be money.
Yes, exactly. You've taken the fundamental principle of money, which is that someone is willing to transact in it. And you have somehow turned that into the thing that backs it and like gives it value and utility in the first place. Like, that's why it's so mindfucky. But now that picture is getting kind of clear, and I'm liking this. Sorry, I just had to get that thought out. Does that, yeah,
I think we've gotten somewhere here, brother.
Yeah.
Fun stuff.
Very cool. One thing I'll definitely say, good move on the NFTs, though. I think, like, because it's a faith-based system, that actually probably was like a tactical business decision in a way, and they're pretty cool. I love anything that's not pixel art or a monkey these days. So, but yeah, if you guys ever want to explore or expand into Cosmos or anything like that, like, let me know, whether it's this account or the Tendermint Timmy one. Cosmos people are skeptical because they're not dummies like a lot of crypto. There's not as many degens here, but they're also super willing to explore new ideas and support projects that have, like, real meat to them. So, look, very open invitation. I would love, given the Luna history, some cosmonauts actually might be a little bit extra skeptical, but I think it'd be super interesting to see some more experimentation like this on our tech, not to like shill it all, but just pretty much in every single way except for amount of documentation and other people using it. Cosmos tech is better than Ethereum. And you can probably say the same for like Avalanche and Polkadot and such, but now that I'm a fan, just open invitation. If you guys ever want to explore Cosmos, let me know. I'll connect you with some people. We'll see what we can do.
Thank you. Really appreciate that.
That being said, has there been any internal discussion, maybe a little alpha, of like where outside of Ethereum you might explore first, even if it's still a little ways off?
Yeah, there's probably going back to the desire to create an like real economic activity. There are a lot of fundamental problems with the EVM and any sort of neutral virtual machine to facilitate real economic activity. And we can get into maybe another time some of the technical reasons why that is. But the point is that there will ultimately need to be a lot of work on like custom VM, and that obviously immediately like IBC enters the question at that point. Like, where,
right?
How does
that factor into everything?
Yeah. So once you start talking about modular blockchains, you have to have the conversation, and that's the
Yep.
alpha. That's where we're at. The
Okay.
discussion, the thoughts are happening, and the research is taking place, and at some point, hopefully, there'll be
So
something to say about it.
let me ask you this: I'm not a developer. I'm more of a sort of ideas guy, like project manager, marketer. But I'm somewhat tempted to like go to one of my dev friends and say like, "Hey, can we launch this Bean thing on Evmos real quick and just see what happens?" How would you guys feel about that?
Yeah, what a great question.
Like, not with any
Imitation is
serious intent, almost purely a test, but also if it were to grow and, be a thing, we wouldn't try and stop it.
Yeah, I mean the only thing I would say about that is like given how obvious it is to us that there are further like economic improvements to be made to the protocol, like
Yeah.
there's an open
In its
like
current state, if no one
yeah,
was
there's
going
an
to
open
update it,
question as
it's
to like
not.
if you're just gonna put it out there, why are you doing that? But on the
Yes.
other hand, like it would still be good data. Like it's all good data.
Yeah.
And so
I
it's
am more thinking of it in that light. Like, I'm sure it wouldn't succeed because,
it's
we
good
wouldn't
data,
keep
but
up
it's
with
good data that would
development.
cost people money is the thing. Like
Yes.
so
Yeah,
it's like
that's the
on the
thing.
one hand, if you really opt into like this is the Wild West, everyone is like free to do whatever they want, and this is just like the website will say like disclaimer, this is a
I
crazy
get what you mean.
experiment. Like
Yeah.
maybe that's okay, but on the other hand, like that probably does take away from where we're going, which is really intellectually serious way of doing this. But like the concept of dissuading anyone from forking Beanstalk is like pretty ridiculous given like the nature of the environment that we exist in, and
Yeah.
we really think the Beanstalk model is the furthest along in this like creating a low volatility money game or puzzle, if you want to say. And so the idea that people are going to fork it is somewhat obvious. Like this is the latest, so of course it's going to get forked. So it's like, you know, we would view that as, some sort of acknowledgement of that concept that Beanstalk is at the forefront of this thing.
Okay, cool. So maybe this will be the closing question here. Might seem a little harsh, but like, don't mean it that way whatsoever. Given that that's how you feel about the tech, why do you feel Bean is so like small and unknown? Is it that the exploit really set you back? Is it just that you haven't done much marketing? Is it just like personal opinion? Why do you feel like I had never heard of Bean until I don't even know how I heard of it recently, honestly. I think it was like Bean Bull, some dude with like a green Pepe bull. I don't know, but I think I was following him for some reason and I saw something. But yeah, why do you think Bean's kind of struggling to gain attention? Or maybe it's not. Maybe in your perspective, it actually has been kind of gaining users and traction at like the rate you expected, which is a fine
So it
answer.
definitely hasn't. Post being turned back on, post replant, if you will, in August, there's been almost no uptake or adoption. And I mean, totally speculating here, but would guess that like a lot of people are scared. They don't understand why
Yeah.
it collapsed last time, and they don't, they're not so eager to jump back in.
It's
And
funny too, like fear often comes from ignorance, right? And just like with something that's kind of hard to wrap your head around with this. Like even
and
me at
rightfully
one point in
so,
the
right?
middle,
Like
yeah,
there's
in the
no
middle of our conversation at one point, I was like, sounds kind of Ponzi-ish, to be honest. Like,
and like yeah, it does unless you really think about it, and it's hard to really think about
exactly.
this stuff. So,
Which, by the
and
way, I
even when you
appreciate
do
you
really
taking
think
the
about it,
time
it
tonight.
still is like you need more people to buy it in the future. So there's some greater fool element of it. There's not I think Ponzi is probably not the right word, but there's definitely like that future demand element, a greater fool element.
But yeah, I think you can say that about anything too. Like even the US dollar, you can say it
We're
just to replace the word buyer with people being born in the country, right? Using it like
sure, something like that. Totally. So this is
cool.
where we're at.
Okay, man. Well, this is really awesome. Are you yourself, like I know you said 3 people are kind of Public. How do you pronounce it?
We say
I know you said it.
Publius.
Okay, Publius, cool. Are you sort of the like face and vocal person? Are the other people known in the community, or?
I do most of the talking. I'm also not a dev, so one of the other ones is like a world-class developer, and he does a lot of the technical talking.
Cool.
And yeah, the three of us sort of roll, pretty tight. So the other two are just waiting for me to come so we can go get some dinner.
Well, I will let you get to them then, in that case. And this has been awesome. This has been 2 hours of pretty deep convo. I'm actually pretty surprised at our turnout tonight. Like last week, we had 100 people. And I thought with the recent USDC, happenings that this was going to be a really popular space. But Terra Spaces, you might have seen in here, has been recording. He categorizes and catalogs everything. A lot of people will probably listen to this after the fact. And honestly, I'd love to maybe do another space a couple months in the future and see if we can't get a better audience. Might have just been an unlucky turnout tonight, but I think this is really interesting. I'd love to, I'll personally keep tabs on you guys, but yeah, really open offer. Like if you ever want to explore Cosmos or do anything, let me know, because I'd love to. Honestly, at this point, I am already sold enough where I kind of want to see the Bean vision succeed. So you've made a Bean ally tonight.
Thank you, sir. It's yeah, we're just doing our doing our best here. So thank you very much, and this has been a wonderful spaces, sir. So thank you for the hospitality.
Absolutely. Appreciate you joining and sitting through some of my questions. If I get the time, I honestly might test myself and my understanding by doing a little like thread write-up. That'll also serve as a cool summary for everyone who doesn't want to sit through this 2-hour space but might be curious. So really appreciate the time here. Thank Guy for me. I know he didn't contribute too much, but just for making the time to be here. And yeah, best of luck to what you guys are doing. I'm probably going to go pick up a couple beans just for the hell of it.
All right, sir. Talk soon.
All right. Everybody else, have a great night. Thanks for joining. Catch us next week. We're going to be chatting with Leap Wallet. Same day, different time, I think. So just stay tuned for the announcement on that. And all the Bean people, I think there's 3 or 4 of you left in here. Check out the Cosmos. Hang around. You might like what you see. I think building bridges between communities is the way to grow in Web3. So have a good night, everyone. Terra Spaces, as always. Appreciate you recording. We'll catch